Good morning, everyone, and welcome to this webinar, which is called Cash for Creativity: Claiming Back Development Costs with R&D Tax Credits. Today it's with our partners R&D Tax, and we've got Linda Ezekiel, who's a regional director at R&D Tax, with us today, and she's going to be discussing what R&D tax credits are, how they benefit businesses, and how you can claim them. Following Linda's presentation, we'll have a short Q&A session at the end. If you have got any questions, feel free to leave them in the chat function on your screens, and what we'll do is we'll put those to Linda at the end. That's all from me for now. I don't want to step on Linda's toes too much, so I'll pass over to Linda.
Thank you, John. Hello, everyone. It's wonderful to have this opportunity to do the webinar today. So are you ready to stop wondering and start finding out whether you could be getting back up to 33% of your development costs for new products, processes or services through the UK tax system? Yes? Okay, then you're in the right place. Because, by the way, some of your competitors may already be doing this. So it's good to find out whether you can also do it. I'm going to, as Jonathan said, I'm going to run through what the scheme is, are you eligible, what activities and costs are claimable, how to go about making a claim, and some tips on the do's and don'ts in terms of HMRC tax inspectors. You're all entrepreneurs, so you'll know that it's quite difficult getting new funding into your business, and you're probably too busy to get involved in bureaucracy and red tape with HMRC. But I also suspect if there's money available through the tax system for your company to invest in innovation, then you'll want to know about it, you'll want to get it. And so my mission today is to see if I can get you more money into your business. It won't work for everyone, but if it does work for your company, you could well be celebrating at the end of this webinar. And it's a pity that the R&D tax credit, tax relief scheme, those words are used interchangeably, by the way. It's R&D tax credits, R&D tax relief, it's all the same thing. It's a pity it's not better understood by company owners, entrepreneurs, and also by your advising tax accountants. Advising tax accountants can sometimes be their own worst enemy. Like your local GP, they're not specialists in everything, but sometimes they try to be specialists where they're beyond their competence, and that can lead to people being put off making a claim. Sometimes they're told they're not able to claim when actually they do have an eligible claim, or sometimes they're assisted and they make errors and mistakes, which is not a good thing to happen. The benefits for small and medium enterprises run into tens of thousands, sometimes hundreds of thousands of pounds. So you really want to get it right. And the schemes, incentive schemes like this, operate in many countries. So if your competitors are getting the benefits and you're not, you're going to already be pedaling uphill again compared to them. And I'm sure you don't want to be in that situation. It's not a good situation to be in. On the other hand, there's nothing worse than happily claiming research and development tax relief year on year to suddenly have HMRC ask questions and then discover that you've made errors or mistakes, because they can go back up to 7 years, that you can get fined, you can get all the benefits taken away. Trust me, no one wants that to happen. So it's important to get it right. And what I'm going to cover today will hopefully help you to take a judgment as to whether you need to investigate this further, and also understand what's involved in making an R&D claim, so that you're not at the mercy of any advisors that are not giving you the right advice. And if you stay tuned to the end, I'll give you some real life examples of clients that we've helped and the level of benefits that we've got for different companies in different sectors. So what is R&D tax relief? It's actually a really good government scheme. It's designed to incentivize investment in innovation, because the government believes that will create new jobs, it will make the economy more buoyant. So it's a win-win situation, really. The businesses get more money to invest and the economy in the UK benefits. But before I go into too much on that, let me just tell you a bit more about why I'm qualified to give you this advice. I've been working in R&D tax credits for 10 years, for 7 of those years as part of R&D Tax. R&D Tax is the trading name of Terry Toms and Partners Limited. and we're specialists in R&D tax credits and tax relief. And Terry Toms, our MD, he actually sits on HMRC consultative committee on R&D tax credits. So we very much have the inside view and understand HMR's thinking on it all. I myself have written a training course for accountants, a professional development course on R&D tax credits to help accountants understand things better. And I personally have helped 150 companies, over 150 companies. And our company as a whole has helped over 1,000 companies to get the benefits. And the value they've got between them all is well over £100 million now. So it's not small amounts of money, it's quite significant amounts. So, you know, it's definitely worth looking into. Actually, it's interesting because even HMRC sometimes disagree. The inspectors disagree with each other. And it can get complex, especially in software R&D claims. But our clients so far have never been fined. And we do get involved in helping companies that are subject to an inquiry by HMRC, so in a challenging situation. And that's really good because that helps us to understand how their thinking is going, what HMRC's view of claims is, and what information works for them and what doesn't. So I'm going to I can usually in a short telephone conversation work out whether you qualify and roughly how much your company could benefit. And I'm going to run through some of the stuff that I do in that telephone qualification call so that you can see whether you may qualify, whether this is relevant to your company. So what qualifies as R&D? Sorry, I'm having trouble moving to the next slide. There we go. Okay, there are two schemes in the UK. The Small and Medium Enterprise Scheme, HMRC refers to that as the SME scheme, and the Large Companies Scheme, which is called RDEC, Research and Development Expenditure Credit. In terms of both schemes, you need to be a UK registered limited company in order to qualify. You can't be a sole trader or a limited liability partnership or a registered charity because you're not then subject to UK tax regulations, and only companies that are subject to UK corporation tax can qualify. In order to qualify as an SME, which is by far the most generous scheme, you have to have fewer than 500 employees. For the large company scheme, therefore, it's over 500 employees. The small and medium enterprise scheme pays out between 18% and 33% of your development costs. The large company scheme, it's between 9 and 10%, so a huge difference. But large companies claim a lot more in terms of their costs. But the devil is in the detail, as they say. So, whoops, skipped a slide there. So you need to look at how the company is owned. If it's privately owned by individuals, then it's a straight head count. But if your company shares are owned by another company in full or partly, or you partly or fully own another company, then you need to look at the staff head count in those connected companies as well. Maybe all of the staff or some, depending on the level of ownership. So I won't go into the details there, but just be aware of that. So those are the technical things, but the key question is, are you innovating in some way? Do you qualify as innovating? So in order to be seen as innovating, that usually means you're getting involved in investing brain time, talent, or resources into developing one or more new or appreciably improved product, process, or service. That's not just any old project development. There has to be some complexity. So for example, you might need to do a technical option appraisal, or you may need to do prototyping or trials and testing to work out the best way to get your desired outcome. Or it might be that you don't actually know whether it's scientifically possible or technologically feasible to do what it is you want to do. So you have to do some experimentation to work out the best way to do it or whether you can do it. And that is referred to as making an advance. So it's making an advance in knowledge or capability in a field of science or technology. And that there's a very specific definition of science. So your activities must be your development activities must pertain to the physical sciences, things that you can taste, touch, hear, see, or smell, or involve the development of technology, software, or hardware. So it doesn't apply to social sciences, it doesn't apply to economics, pure mathematics, or the arts. It's got to be development projects in the physical sciences world. I'm going to run through a whole list of the type of activity that qualifies, hopefully to give you a flavour. So software application development, technology systems, VoIP systems, AI, food tech, so developing new food processing recipes, manufacturing technology, similar thing in agri-tech as well, development of gadgets, equipment, electronics, electronic circuitry, packaging, so packaging methods or new packaging materials such as replacements for plastics, recipe development, so that might be food recipes, it might be cosmetics or chemical formulas for cleaning materials or substances, materials, so breathable fabrics or stronger fabrics or the new world of fabrics, sports fabrics, engineering designs and construction methods, so the whole world of architecture and construction, so building in complex environments, new ways of developing, creating a building, structures and materials used, manufacturing processes, so automation, robotics, all those sorts of things, bioenergy, so wind turbines, renewable energy, the frontiers in that sector, life sciences as well, so biology, anything in the health sector, microbiology, all those sorts of things, and agricultural capabilities, so how food is grown, how animals are reared, and many other development activities as well. And HMRC will want your competent technical professional in the relevant industry, so someone that's qualified with knowledge, experience, or qualifications in the relevant sector to take the judgment as to whether you're doing R&D or not. So it needs to be that technical person. So for instance, I'm not a software developer, so I can't ultimately say whether a software development is R&D. I can advise, but ultimately the developers who are at the cutting edge doing that software development are the people that should make the judgment. And HMRC generally relies on the judgment of the competent technical professional. So if the competent technical professional in your field can just easily, readily deduce what needs to be done, or there's information available in the public domain on how to do it, then you'll not be doing R&D, because that won't be cutting edge innovation. So you won't be able to claim that your activities are R&D for tax credits. But if you can make that case, then here's how you go about making a claim. The R&D benefits are claimed and paid through the UK tax system. They're integrated into your company's annual corporation tax return. The benefits are based on how much you have in terms of qualifying costs based on the activities that you're doing. And I'll go into that in a bit more detail in a moment. So it relates to your accounting year, your accounting period, your tax period. And it's marvelous. Once you submit the claim, if you're due money, like a repayment of overpaid tax or reduction of tax bill or cash payment, you get it within 4 to 6 weeks. So to go into a bit more technical detail, this is the technical part, so bear with me. So the way that it works is you identify your qualifying costs, your total costs, and that will give you an additional deduction in your annual account. So if you have a profit, it will reduce your profit. If you have a loss, it will increase your loss, or it might put a profit into a loss situation on paper. It's a tax calculation. So if you're in a loss position, you can claim a cash payment rather than carrying forward that loss. Normally, if you're in a loss position, you carry forward the loss and you can use it to offset profits and therefore reduce tax in future years. But you have the option under the R&D tax credit scheme to claim that loss, claim a part of that loss as a cash payment. Or, as I say, you can reduce your corporation tax payment, so less corporation tax to pay. So just to give you a quick idea of how much the value could be, for the small and medium enterprise scheme, you get back between 18% and 33% of the R&D costs that you identify, your claimable R&D costs. So if you had 100,000 of R&D costs, your cash benefit should be between 18,000 and 33,000. If you had 400,000 of R&D costs, your benefit should be between 72,000 and 132,000. And if you had a modest 10,000 of R&D costs, then it will be between 1,800 and 3,300. It actually depends on your profit or loss position, exactly what it is. So that's the ballpark range. So how do you go about making the claim? Well, you need to produce two things: a written document describing a sample of your most costly R&D projects, up to 10 projects. Actually, the guidance now, which has just been revised, says if you only have 3 projects or up to 3 projects, you should describe all 3. If you have more than 3, you should describe enough to account for 50% of the costs, R&D costs that you've identified, or 10 projects if that still doesn't amount to 50%. And then you need to give a cost breakdown showing your total R&D costs against each type of qualifying cost. And I'm going to run through what your qualifying costs are. But first, on the technical justification document, you need to make a case. It doesn't need to be a long and drawn out case, but you need to make a specific case that addresses what the scientific or technological knowledge or capability was that existed at the start of your project. So in a sense, what was the baseline? What did you do to build on that knowledge or capability? And what was the outcome? And what scientific or technological uncertainties, those are the terms HMRC uses, did you face? So what were the complexities? What were the things that you had to do that made it R&D? The things that you didn't know at the beginning that you had to work out in order to get to where you want to be, or you may not even get there. It doesn't matter if you fail, it's still eligible in terms of R&D. So we call that your written technical justification document. And your competent technical professional should be involved in making that judgment. So that's the technical written narrative. Then you also need to provide the cost breakdown. So you will work out your total qualifying costs against the main headings. These are the biggest areas. There are a couple more headings as well, but staff salaries for time spent on R&D. And in the case of staff salaries, you can claim 100% of the relevant time of the member of staff. So if your member of staff cost you 50,000, including the gross salary, the employer's national insurance, and any company pensions paid, then, and if they spent half of their time on R&D, then your R&D cost would be 25,000, half of the 50,000 salary cost. So that's how staffing is worked out. In terms of subcontractors, so let's say you have a team of people doing development activities, software development in India, and let's say that costs you 200,000 in the year, but only half of their time was R&D, so that's 100,000. You can include that cost, but discounted to 65% of the relevant cost. So in that situation, you had £100,000 of relevant costs. You can actually add to your claimable cost 65,000, 65%. The same for agency staff. So if you use staff from an employment agency and you pay the employment agency and they pay your member of staff, you can claim the portion of costs that relates to staff working on your R&D project. And then you can claim materials and energy consumed. So let's say you're doing food manufacturing and you run manufacturing trials and you waste a lot of product, then you can claim the cost of that product wasted. Or if you build a prototype and you have scrap metal at the end, then you scrap it. Then you can claim the cost of the metal, the materials in that prototype. So those are the main areas that you can add together to work out your qualifying R&D costs. And then those two documents, your technical justification and your cost breakdown, and including a breakdown for the projects that you described in your technical document and the total costs and the cost per each of these areas. You submit those two documents to your tax accountant and they submit it with your tax return, or if you're going back, you can go back 2 years based on your accounting year end. So right now you could claim for the year ended, any year that's ended 31st of May 2017 and 31st of May 2018. But once we get to the 1st of June, the year ended 31st of May or any time up to 31st of May 2017 drops off the end. And it's very rigid, so you can go back 2 years based on your accounting year end. Those documents are submitted with your tax return or an amended tax return if you're going back to years that you've already done, and over to HMRC. So it's really important that, actually, I'll go back to my previous slide I missed. HMRC doesn't have time to look at all the claims that come in. There was 1.8 billion paid out in 2016-17 to small and medium enterprises, so a large amount of money. They don't look at everything. In fact, they don't look at very many claims, but that's not a reason for bad practice. It's a bit like Russian roulette, I say, because you may get looked at in your first year. You may take the bullet right away. You may get looked at in 4 or 5 years. And if you've got things wrong, as I mentioned earlier on, HMRC can then start asking you loads of questions. They can go back over 7 years. They can fine you to equivalent to all the benefits that you got. And so you, trust me, you really don't want to go there. So the best protection is to do good, clear, compliant information, and not incorrect, incomplete, meaningless information. Think about it. If HMRC is getting loads of claims and they get some with no information, they get some with a load of rubbish that is not going to tell them anything, they get some that have errors and inaccuracies. Which ones do you think they're going to look at first? Who they're going to ask questions? You don't need me to answer that. It's clear they're going to start looking into those where they don't have good information. So that's it in a nutshell. But what I'll do is just give you a brief recap, because I've run through that really, really quickly. So in order to qualify for research and development tax relief, many companies don't realise this is something that applies to them, and nor do their tax accountants. They don't use the term R&D tax, or they don't use the term research and development for their projects. They don't think they're making an advance. They don't think about whether they're making an advance in science or technology. But if your company has under 500 employees, so you qualify as a small and medium enterprise, you could be getting back between 18% and 33% of your investment in development of new products, processes, or services. If you're a large company, then it's around 9%, 9 to 10%. You need to be a UK registered limited company that is undertaking development activities that are leading to an advance or knowledge and capability in some way. So you're doing some sort of in a field of science or technology, and that's a physical science or technology, hardware or software development. And there needs to be uncertainty in that development process in terms of how to go about it, or whether it's actually possible or viable or feasible. And you need to be able to express what those uncertainties were. Okay, so that's it in a nutshell. So have a quick think now. How likely do you think it is that you could qualify for R&D tax relief, tax credits? With 1 being no, I don't think I would qualify, and 10 being yes, I definitely believe we would qualify. And just jot it down in the chat box on the bottom right of your screen what you've scored yourself, so that we can have an idea from all of our attendees. Okay, I'm going to go into some quick examples now to give you an even better feel of how this works, hopefully. So these are all software examples. So a London-based fintech software developer received an £85,000 tax refund from HMRC. That was for 2 years, going back over their last year and their previous year. A West Sussex software developer hasn't paid corporation tax for the past 5 years that we've been working with them. So the R&D claim is reducing their profits to zero, and sometimes they get a cash payment against a loss. An Edinburgh-based digital implementer received £220,000 as a tax credit cash payment. So that was a single year. That was a significant amount of money. They work in the Microsoft world. They're not a huge company, but a few million turnover. The first case, not even a million turnover, a fairly small company. It's just trying to get to the next slide. Here we go. Different industries. So a Kent Brewery received 34,000. Again, that was a 2-year claim, but they're very small, and that was great for them. It really helped them with investing in new brews, new formulas and recipes. A London-based ice cream maker received an average of 60,000 tax reduction for the past 3 years. Actually, it's the past 5 years now. And they make ice creams, so natural flavour ice creams, Prosecco ice creams, all sorts of different things. They make new flavours every year. They have to work out the ingredients, the recipes, and then they have to work out whether they can manufacture on a mass scale. So a lot of R&D in there, and significant claims for them makes a huge difference to their business. An Essex-based lighting design company received an average of 68,000 each year for the past 3 years. So they make lighting luminaires for large projects such as Crossrail or the Shard of Glass. They make the lighting systems, new fixtures, new lighting, new lighting units. And again, it's very difficult in their world because cash flow is a big issue because they have to work with large contractors. They do all of the R&D months, sometimes years before they get the payments. So great for them, helps them to invest. I quickly whiz through these. These are some testimonials. So this is real clients, and we've actually named them here. They've agreed to be named. So MSCAD Global Limited, they do graphical interface applications online, and we've worked with them for several years, and they're really happy to have had reduced their taxation, big offset, and claimed a cash payment. Another fintech, Alternative Soft. Again, we've been working with them since 2014, and when I first worked with them, they were already claiming, but their existing specialist hadn't been able to work out how to claim for development costs in a sister company that's based abroad. It wasn't that difficult, and I managed to increase their claim value threefold by working that out. So they're very happy, and they believe we save them a lot of time in the claims process as well. Last one, Bailey Fabrications Limited. So they don't actually make, they engineer wrought iron and iron things such as spiral staircases, bridges, balconies, and they've got to work out how to make the engineering work aesthetically and structurally, and sometimes how to fit things, let's say a balcony to 100 flats efficiently and easily, and there's R&D in all of that. And just a very quick testimonial from an accountant. We work with lots of accountants who refer business to us, and that's just one of the accountants out in Kent that we have clients with. So I set aside time this afternoon and on Friday to talk through your specific circumstances to help you check if you could qualify, and also hopefully estimate how much a benefit could be to your business. So do book a time using the link shown on your screen below, and I'd be really happy to talk to you. It's no obligation, although of course, if there is an opportunity to help you, I'd be delighted to do so. But I'm very good at just working out whether you could qualify or not, and I'd be very happy to talk to you about that. So do book a time in, and we'll talk. But also, as John said, questions. Over to you, John.
Yeah, thanks very much, Linda. That was really interesting and filled with some great advice. So we've had quite a few questions through the live chat. So we'll get through them as many as we can. So the first one is from Tom, who's asking what the actual process is of how to submit it to HMRC. I think probably best to kind of ask what the first steps are. Should it be getting in touch with an accountant? Should it be getting in touch with HMRC directly?
Right, no, there isn't a scheme where you can do advanced assurance and get in touch with HMRC directly, but it's almost like going through an inquiry, so it's a much more weighty process than just doing it. So basically, it's good to talk to your accountant, and as I say, some are able to help, some aren't, but essentially it's a matter of understanding whether you qualify and what activities you have that qualify, putting together those two documents, the technical narrative and the cost breakdown. Give those to your accountant. Your accountant will then include the relevant costs and do the calculation in your tax computation and in your actual tax return, and will submit those summaries to HMRC along with your tax return, and that's it, it's done. So if you're not sure, I think it's well worthwhile talking to a specialist advisor, and most specialist advisors will be able to tell you for free whether you qualify and roughly how much your claim is worth, and then you can decide whether to work with them or do it yourself or chat to your accountant to see what help they can give. But tax accountants aren't good at understanding what qualifies as R&D and make mistakes in the claims process. So obviously there's some very good ones, but there's a lot that aren't. They just don't come across it enough to be competent.
Okay, brilliant. Thank you, Linda. So the next one comes from James, who is asking if claiming R&D relief affects other grants such as Seed Enterprise Investment Scheme or EIS. Those two, I believe, are essentially loan schemes. They're not grants, but so it doesn't affect them. But if you have a grant, so if you have an innovation grant, so Innovate UK grant or any of the other grants, then normally, this is a complex area, but normally you can't claim as an SME for the project or the part of the project that was supported by the grant. So if the grant is for your R&D, for your innovation, and you're using it to fund your innovation, then you can't claim under small and medium enterprise for that part of your cost. You can claim under the large company scheme, but you can claim usually for the rest of the costs. It depends on whether that grant is state aid and how big your project is. So the devil is in the detail there, but it doesn't rule you out from claiming. And it might be you have to do a combination of a small and medium enterprise claim and a large company RDEC claim. Definitely worth getting advice in that situation. To qualify as a small and medium enterprise, there's one thing that I didn't actually mention in the presentation, but you need to hold the financial and commercial risk on the R&D. So you're doing it at your own risk. You're not being subsidized. You might get paid by your clients, but if you only get paid on results, then you're still holding the risk. So you qualify. If you don't hold the risk, you have to go under the RDEC scheme. And that's because the small and medium enterprise scheme is generous and therefore it's considered state aid, whereas the RDEC scheme isn't considered state aid. So that's why if you're subsidised, then you would have to go under the large company scheme. Otherwise, it's the SME scheme. As I say, a complex area, so do seek advice if you're receiving grants, but it doesn't rule you out. Okay, excellent. So the next question has come from Eden, who is asking if you were to submit a claim for R&D tax credits for the previous financial year, does a company need to amend accounts with Company House?
No, it's a good question, but if you're doing the small and medium enterprise scheme, which actually works quite differently from the large company scheme, and all I've talked about here is the small and medium enterprise scheme, it works different in terms of your accounts and your tax calculations, but you don't need to represent the information in terms of the R&D claim in your annual accounts. So you don't need to change your annual accounts if you go back and amend things. You need to ask your accountant to change your tax computation. So it's simply a tax exercise for small and medium enterprises. So therefore, there's no worries about changing anything in terms of your annual accounts with HMRC. You just ask your tax accountant to amend your tax return and resubmit your CT 600 tax return form. And that's it, it's done.
Okay, excellent. The next one comes from Chloe, who has asked, what are the most common reasons that a legitimate claim fails?
Well, there aren't. If it's a legitimate claim, it shouldn't fail. But it can end up subject to queries and questions from HMRC. If it fails, if it does really seriously fail, then it's because you haven't made the case correctly. But if you over egg it, for instance, so you claim more costs than look right, and obviously HMRC sees lots of claims, so they have a good idea, and you haven't made the case as to why yours was more expensive, then you can end up with questions. But the kind of things that HMRC object to are things like saying 100% of all my designer team were doing R&D, because they'll just say no, they can't be doing R&D all of their time. So it's being fair and reasonable when you put together the information will help to guarantee that you've got a good claim. So there's no reason for failure if you have a legitimate claim, but there are the technical tests, obviously, that you are actually an SME, if you're claiming under the SME scheme, and that you get the information correct and you present it correctly. Just to mention, our system is a self-assessment system, so they expect you to do a self-assessment on this. And I'm always hearing people say, all of our R&D claims have been approved. When HMRC doesn't approve claims, they accept them and process them. So unless you've been asked questions, which doesn't happen very often, and certainly not every year, then there's no way that you can say that HMRC have approved your claim. They simply accepted and processed your self-assessment. Okay.
Okay, brilliant. So probably our final one, we might be able to squeeze one more in. But so Natasha says that she is creating a brand that's going to be having multiple art materials, and I would assume that there'd be sort of a certain element of research and development around it with the paints and brushes. She's asking if that would be classed as a claimable activity.
It's difficult to say on that information so far, but if you're developing new paint products or new paint brushes, so you're physically developing those things, or you're getting someone to do that on your behalf at your cost, then that could be R&D. But if it's a matter of branding something and bringing together the products under that brand, then there's no advance in knowledge or capability in any field connected to the physical sciences, because that's about branding and information and content. So that wouldn't be R&D. That only would become R&D if you're physically experimenting with making new paint products or new paint brushes that improve on existing brushes and paint in your industry.
Okay,
it's a difficult
we've
one.
got
People
time
don't mix up this sometimes, but that's it.
Okay, so we've got time for one more. So James has asked if development carried out by another company on behalf of his organisation would be eligible for a claim. So it's kind of my understanding of his question is that they've commissioned another company to do some development for them, and whether or not that would be eligible for a claim.
Potentially it is eligible, so that would be a subcontracting situation. So 65% of the relevant development cost would potentially be eligible, but it also has to be looked at whether the company, his company, took the commercial and development risk on it. So were they going to pay that contractor regardless? Because if they were, then that's fine. But if the company says to them, okay, we'll have a go at your development, and if you don't like what we've done, then you don't need to pay us, then it would be that company that's taking the risk, and therefore it would be that company that has the claim. This is sometimes quite a tricky area. So what the terms of engagement are is important to work out who holds the risk on it. And the other slightly tricky thing is that if there's no in-house competence in the development, so you're relying on your subcontractor to make the judgment as to whether R&D takes place, sometimes that works fine and they're happy and willing to do that. And if we're advising, we would talk to them to work out what they've done. But sometimes they're not that keen to spend the time on it, or they've pulled the wool over the company that's contracted them, saying it's very complex when it wasn't that complicated and therefore it doesn't qualify. So it's definitely potential, but needs to be worked out and looked into.
Okay, I'm not sure if you've just seen in the chat function that James has just clarified that that they have contracted the other company to complete the development and will be paying regardless because they don't have the in-house skill set. So I guess that kind of clarifies that area.
Excellent. Then yes, in that case, every likelihood that there's an R&D claim there. There are R&D costs that can be claimed.
Okay, brilliant. That's all we've got time for. So I'd like to thank Linda again for her contribution today and all the advice that she's provided. If there is anything that you'd like to catch up on with today's webinar, we'll be sending out a recording in the next day or so. And what we'll do is we'll also circulate that link to book a call with Linda as well. But that's all from us today. Thank you for joining, and goodbye.